You've probably already figured out in just a few seconds that this is not Matt. He had something going on this morning, so he asked me. This is Macy to kind of introduce and run the call this morning. So I want to thank everybody for being on the call. It looks like we have a great turnout. I also want to thank our sponsor today, which is United Risk Agency, and that's Russell Taylor. Wasn't sure if he's going to call yet or not. But we've got him as a sponsor, and today we have Ed Peace with USDA. And just a little background on Ed, he grew up on a farm in southern Georgia and graduated from the University of Georgia with a bachelor's degree in agriculture economics. A 30-year employee of USDA Rural Development, he has served in numerous roles, including loan officer, underwriter, collecting agent, and construction inspector in USDA RD local offices across Georgia. He has also held positions as specialist and program director for the single-family housing programs in Georgia's state office. He recently moved over to the national headquarters staff on the lender and partner activities team. He lives in Blackshear, Georgia with his wife of 35 years together, and they have 3 grown children. So Ed, we're very pleased to have you, and we hope that everyone will take a piece of knowledge back from your presentation today. So I'll hand it over to you, Ed. Thank you.
Okay, Macy. Well, thank you very much, and I appreciate the introduction. Good morning, everybody. My name is Ed Peace, as Macy said. I've spent a good many years with the agency, and just as of June, moved over to the national office. So it's been a minute, as they say, since I've processed guaranteed loans, but we are catching back up with the details. So today, I'd like to share my screen with you, and if you can see my screen shortly, you should be able to see the introduction slide there. And my name is at the top, Ed Peace, just like peace on earth. And I believe we're going to have Q&A at the end. So if you enter a question into the Zoom chat, I believe Macy or someone will be monitoring that toward the end, and we can answer your questions there toward the end. So I'm assuming most everybody knows about USDA Rural Development Guaranteed Loans, who's on the call today. I will be presenting this to the National Mortgage Bankers Association, in matter of fact, next Thursday. That's the reason why I have the MBA education background on my slides today. So this is kind of a snippet of the hour-long presentation that we'll be doing next week with the National MBA. So these are just the updates as of today. And before we get into the nuts and bolts of it, I'd kind of like to go over a few things with you. Make sure you understand there's a website just for lenders out there where you can get the turn times of our file reviews. We found that is the most beneficial use of that website. It also has linked to the COVID-19 updates, and that's where you also can subscribe to have the loan program update sent to your email. So anytime there's an update, you can have that sent straight to your email so you can keep up on all those. And if you have missed any previous updates, the following website has them listed under the heading Gov Delivery Updates, and you can see that link there. And I can send this out to my contacts there, and they can distribute it to you so you have this PowerPoint presentation so you can click on these links. And also on that same, in the middle of that link there, you'll see it's LINC. That stands for, that's short for Lincoln. President Lincoln, started the USDA, the Department of Agriculture, and so a lot of things that we have LINC link in the title in honor of him. And so there's training modules at that website as well. So very, very helpful. There's, I don't know, multiple training modules there, how to process loans and working with GUS, the GUS Guaranteed Underwriting System, what have you. Also, updates become official once the change is published through a procedural notice or procedure notice, PNs. And you can view the PNs at this link. And anytime you're searching for anything in our websites, of course, most of you probably know Control F is for find, and you're looking for the term 3555 in any of those PNs. So any PN that is announced that comes out will have 3555 in the title there. Okay, so big news. As of today at 6 a.m., the agency has loaded the fiscal year 21 funding into our funding system. So all of the loans since October 1st that were all of the conditional commitments that were issued subject to funding, we will now be going back starting today and obligating the government funds that will back that loan for all of those, and will reissue the conditional commitment without the subject to funding language. Then this will alert the lender that you all can close those loans, okay? So that's hot off the press as of 6 a.m. this morning. Okay, so getting into some of the actual updates, there were probably, I don't know, I'm gonna say a half a dozen or so procedure notices where a lot of these updates come from, and I don't know that I have them arranged in any particular order. So, but there is a new attachment 9A that allows for many sources of income to have only 1 year history to be considered stable and dependable. So as you know, previously, income such as overtime or bonus income, we required it to have a 2-year history to be able to use it for repayment income, you know, to qualify them for the ratios. Well, now a lot of those types of income only needs a 1-year history now. So hopefully that's good news. And we know the $25 technology fee has been around for a little while now, since October of last year. The form 3555-21, which is the request for guarantee, it eliminates the interest rate lock date because we're not, we don't have a cap on those interest rates anymore. So the form's been updated to eliminate the date for the lock. And there it is, the elimination of the interest rate cap. I think that was that's been around for a few months now. Student loans also, income-based repayment utilizes the greater of 0.5% of the balance or the stated payment from the loan servicer for the ratios. So that 0.5%, I think, was lowered from 1% of the balance, which we've gotten rave reviews about lowering that from 1% to 0.5%. And then the GUS Accept loans no longer require a credit score validation or a downgrade to manual for new debts. So please be aware of that. The tolerance threshold of $50 for increases in debt after the conditional commitment is issued. So if it's more than $50 increase in any debt after the CC is issued, then it has to be resubmitted. So the smaller debts, there's no need to have to resubmit for the request for guarantee if it goes up less than $50. Okay. Chapter 6 revisions. Chapter 6, this is the, all right, so it removes the 6% seller concession maximum on the construction loans. So so for the construction to permanent loans, there's not a maximum seller concession of 6%. Attachment 6A was added to contrast the differences in our refinance options. You know, we have a standard refinance, streamlined and streamline assist. So now you have a chart there that will compare and contrast those refinance options. Attachment 6A, matter of fact, I think that's wrong. I think that's supposed to be 6B, added to provide guidance on refinancing USDA direct loans. So, you know, our direct loans are loans where the agency has made made the loan directly to a borrower. And so our guaranteed refinance loans are only to refinance current guaranteed loans or current USDA direct loans. So there's some specifics about our direct loans that are addressed in this attachment 6B. And again, that is supposed to be 6B. Okay. Moving right along, chapter 9 is the the income chapter. And revisions have been made to provide clarification on acceptable income types and time frames. The revisions allow lenders additional flexibilities in determining the applicant's stable and dependable income. Okay, so I don't have screenshots of the actual procedure there, but I'm just kind of bringing your attention to that. The recent revisions also added guidance on income lasting less than 12 months into the future. Okay, how to handle that. Income verifications must not pass through interested third parties, example, builders or realtors. So we have to keep that integrity intact when receiving income verifications back. The revisions allow time spent in school towards requirement for annual and repayment income. And so in other words, the time on the job, if they have had a specific training in a specific field of study, whether it's college or tech school, it even says career-based certificates in high school, that we can use that time spent in gaining that certificate as toward time on the job. So they're trying every way that we can be to be flexible on a lot of these issues as long as it makes sense. Continuing chapter 9 revisions, the new revisions relaxed requirement timeframes for certain types of income used in repayment income calculations from 2 years to 1 year. And we have already mentioned that, so hopefully that's a welcome change. Clarifies that GUS accept full documentation loan files are not manually underwritten loan files. So anytime, I don't know if y'all know or not, but you know there's a feature of GUS that kind of randomly selects a certain number of files submitted full, you know, as far as accept files when we require full documentation. And so there's wording now that says, hey, just because it's a full documentation does not mean that we're now considering it a manually underwritten loan file. So there are requirements to the manual underwrites that a GUS accept full documentation may not have. Okay. All right, moving on to chapter 12. That is construction loan chapter. It clarifies that a construction to permanent loan may be considered a purchase transaction by the agency, yet should be identified and coded in GUS as a construction only. So that helps us know that it's construction only. But as far as the purchase transaction, as far as the loan goes, that we consider it a purchase, okay, not a refinance. So we're not refinancing an existing construction loan. It is coded purchase, but in GUS is coded construction. Hopefully that's not confusing. Okay, so there is guidance out there related to COVID-19 and what's happened this year. I know I'm preaching to the choir, but it's been quite an unusual year. So there was guidance issued back in March related to COVID-19 and how that's affecting loan making. As far as a myriad of scenarios that you know what could happen out there, you know, is happening. So it's what was issued in March of this year has now been extended through November the 30th of this year. Not sure if they're going to extend it any further past November 30th, but here's what we're talking about. exterior only appraisals are acceptable through November 30th. If that appraiser is uncomfortable going into that house due to COVID-19, then you as the lender can accept an exterior only appraisal as far as we're concerned. And when that happens, then no certificate of compliance with the HUD handbook is required. Okay, so the next one is a signed letter by the borrower that all repairs are completed in acceptable fashion, along with photos, paid invoices, occupancy permits, etc. So the borrower tells you, the lender, that all the repairs are done, and then we get either photos, or you get photos, paid invoices, and occupancy permits. When unable to obtain a verbal VOE within 10 days of closing, maybe that's due to a temporary closure of the borrower's workplace, following is acceptable. An email from the employer that they are still employed. And if that is not able to be obtained, then a verbal VOE may be waived when the borrower has 2 months cash reserves. Again, this is just going through November the 30th as a temporary measure to work through the COVID-19 pandemic. And in a nutshell, this guidance basically says borrowers with no income or only unemployment benefits are not eligible, because that is a temporary measure and their income does not need to be temporary when qualifying. Okay. And then there are some frequently asked questions related to COVID-19. There's a link to the frequently asked questions. And y'all, we could probably spend an hour going through just this set of FAQs. But there's 9 pages worth of questions in how to originate and service USDA loans during the COVID-19 pandemic. Highly recommend you go to this link. And again, I will send this out so that you can have it. But here's examples of the questions. There should be 3 bullets right here, but here's an example. Is there a waiting period after forbearance in order for a borrower to be eligible for a new loan? That answer in a nutshell is yes. They have to have made 3 payments under the new, have to be 3 payments away from forbearance in order to be eligible for a new loan. Can we close the loan before the borrower receives their first paycheck after returning to work for the same employer after being furloughed due to COVID-19? And basically the short answer is no. They do have to have already received that next paycheck after going back to work. So just because they're back to work, we need to have at least 1 pay stub to show what their income level is at that point. Another example of those types of questions: a self-employed borrower received a deferred SBA payment protection program loan. Since it will probably be forgiven, can that debt be excluded from the debt to income ratios? And the short answer is no. It may be forgiven, but at this point, it's not a guarantee. So those are the types of questions that are asked there, and the answers that are given. The foreclosure forbearance that we just talked about, this is on the servicing side, may be for up to 180 days with an additional 180 days if needed. No documentation is necessary from the borrower. They must only indicate they're suffering a hardship due to the pandemic. No lump sum is required at the end of the forbearance period. Missed payments must be repaid per the arrangements between servicing lender and the borrower, may be added to the end of the loan. Payments may be. And all loss mitigation measures outlined in the handbook are available. Okay. And kind of a coming soon section, within the next year, likely, that certain lenders, high-performing lenders, could actually have lender-delegated underwriting authority with USDA. And this big change is still in the works. And it would pertain to the lender. Once that delegated underwriting authority is obtained, that lender could input the loan and obtain their own conditional commitment and loan of guarantee without USDA's involvement. So that's pretty big. Y'all probably have known that that's been in the works for several years, but with the wording that we're hearing coming out of Washington, that it's closer than we ever have been, and it's still being pushed forward. So hopefully before very long, you'll be able to see that. Okay, I know we're running short on our coming up on 30 minutes. I did just want to throw out there, don't forget about our single close construction loans. Again, those are in chapter 12 of our handbook. The builder benefits, they don't have to put up their own capital for construction. Realtors benefit, and they get paid before the house is even built. Of course, the buyer benefits because they're only paying loan closing costs for one loan and not a construction loan, and then having to turn around and pay for a loan closing costs for a permanent loan. There's interest in PITI reserves that can be established and used during construction, so they don't have to make rental payments plus the new payments, as well as the contingency reserves. And we know about newly constructed homes having less maintenance concerns than older homes. And also the escrows for exterior and interior development, that was earlier this year. You can see the bullets there. It talks about no greater than 10% may be held back in escrow as long as the livability of the dwelling is not affected. We do not require 1.5 times the amount. It's just 100% of the repairs that will be escrowed. The development will be completed within 180 days of closing. And so you can see the rest of that there. Remaining escrow funds that are personal funds may be returned to the applicant or the seller. So if any of that is funded by the borrower themselves. And here's one that says that we don't absolutely have to have a contractor involved for exterior or interior development, as long as the estimated cost to complete the repairs is 10% or $10,000 or less. So just know that that's out there as well. That hadn't been around all that long. So I did want to bring your attention. I believe you all in Mississippi are on team 2. So if you have, looking at the map, if you have file specific questions, send an email to that SFHGLP, that's Single Family Housing Guaranteed Loan Program, to TWO, that's the second theme out of 4, at USDA.gov. But if you have general policy questions, we have an in inbox here that's just Single Family Housing Guaranteed Loan Division. Is what all that stands for. SFHGLD.program at USDA.gov. Okay, so right now I believe we're gosh, I should have looked it up right before coming online, but I believe we're about a week on turn times right now. Here's my contact if you have questions about our presentation today. And with that, I believe I'll turn it back over to Caitlin or Macy.
Ed, thank you so much for that presentation. I can't remember if you said it or not, but I think this presentation will be sent out for those that were on the call. So that's great to have that information. As a token of our appreciation for you speaking today, we're going to send you a gift from the mustard seed. And I think Caitlin has a picture of the really pretty pottery that they have. So we just wanted to say thank you for presenting today and being with us. So this is just a token of our appreciation that will pop in the mail to send to you. So thank you so much again for being on the call.
That looks very special. I appreciate that very much.
Absolutely.
Seeing those faces my day.
They're precious. Again, I want to thank our sponsor, which is United Risk Management. Again, that contact is Russell Taylor if you have any questions or need to reach out to them. So I want to thank them again for being our sponsor for this meeting. I did forget to ask, and I didn't see any questions come through the chat. I'm not sure if Caitlin got any privately. Caitlin, did you get any privately?
No, I haven't seen any come through yet.
So before we get off the call in a couple of minutes, if you do have a last minute question, just shoot in the chat box and we'll look at that real quick if you have any for Ed. So while we're waiting to see if you have any questions, our next meeting will be the annual membership meeting That's going to be November 5th from 10 a.m. to 12. Registration opens today, and you should have already received an email this morning to register for that upcoming call. And we actually are offering sponsorships for this annual membership meeting. We have currently sold the speaker sponsor, and we currently have sold 3 meeting sponsors, and we have 5 left. So if you know of someone that may be interested, an affiliate or anything like that, that would want to sponsor this meeting, we would be very happy to have them on. So I'm not seeing any questions. Oh, I think we do have a question from Noah Lambert. Ed, this is going to be a question for you. I'm just going to read on Noah wrote it. Hi, we were previously told that forbearance would require a 12-month repayment before a USDA loan can be refinanced. Can you verify we can do a refinance on a USDA loan with only 3 months of repayment?
Okay, good question. And I can kind of see the confusion there. So to do the refinance, they say that the 12-month history has to, in other words, the loan had to have been in repayment for 12 months before the refinance can be done. If the forbearance happens, say the loan has been outstanding a couple of years or 5 years or so, then that meets that 12-month period having been in repayment. They're in forbearance and they have now come out of forbearance, then that 3 months period is only for the forbearance, being in repayment since the forbearance. I hope that makes sense. So 12-month repayment period is how long they've been making payments on the original loan. So in other words, we're not going to allow the refinance on a loan that's been outstanding less than 12 months.
Thank you, Ed, for answering that.
That
and Noah, thank you for that great question. I'm going to wait just a couple more seconds to see if anything else comes through. And again, just to remind you to register for that annual membership meeting. We've got some really cool things planned for that. So hopefully you will be able to attend. And I don't see anything else coming through. Again, you've got Ed's contact information. If you have any questions specific to him, reach out to him. And if there's nothing else, Ed, thank you again. We appreciate your being on the call, and we will go ahead and end this meeting. You can go enjoy your day.